Good afternoon. This is the video newsletter for Buy Sell Short for Sunday, September 25th. Another week of up and down action. We had the Fed come out, the market throw a tissy fit on what happened. We've still got the grease crap floating around, and we have an interesting setup. Actually, let's start off with the Dow daily chart. We had that huge 2 day sell off Wednesday and Thursday after the Fed meeting. We broke through that previous August low by 8 points, but we did manage to bounce a little bit on Friday. So, what's going to happen this week is, the $1 million question. Did this classify as a double bottom bounce or double bottom bounce, and are we on our way back, for a 300-400 point bounce back to the 20-day exponential, or are we going to continue to break down and push towards that 10K level? Again, what it's really going to depend on is what happens in Europe. We had a lot of rumors floating around on Friday, which is the reason we saw, if you're even watching the indices, there was quite a few times during the trading session on Friday where we had the Dow popping 40, 50 points up and down in one ticks, like in 2, 3 seconds. We were down 50, we were up 50, etc. And the reason for that was some Bloomberg reports on rumors that the EU was going to start buying Greek debt. So the expectation is we would get some news out of Europe, and we still may. We still got another few hours before the markets open in the U.S. tomorrow. Now, we did have some negative news just come out not too long ago. The European Bank Lobby Group has said they do not want to participate anymore in the private bailout. Essentially, they're saying they've sacrificed enough. They don't want to sacrifice anymore. So it's going to be interesting to see how the futures market plays off that. But we are deeply oversold on all the indices, and we could have a possible bottom here. Let's see. SMH, though, has been very, very strong over the last two sessions. Friday was very strong, but even when we added our positions on Thursday, relative to the overall market, you can see the SMH was able to hold really nicely above its previous August lows. We've got all the other major indices testing those August lows, but we have the SMH about 8% higher and rebounded nicely back to the 20-day exponential on Friday. SMH leads this market. As I've continued to say, medium term, the SMH is telling us that this market is going to have a really big bounce. Now, the question is going to be, when is that bounce going to happen? And again, we come back to that same old excuse. We have to wait for the Europeans to at least try and kick the can down the road. If they can kick the can down the road really, really soon, we could be in store for a very nice end of the year rally. But until that happens, we're going to continue to maintain our high cash stance and just, trade scared, I guess is the best way to put it. High cash, fast gains. US dollar has broken out big time, and that is a reason why we've seen commodities just get decimated over the last couple of days, especially gold and silver. Silver was down 20% at one point on Friday. We've got gold down almost $300 an ounce. It's actually nice to see the gold bugs get their asses handed to them, given the stupidity we saw in gold over the last several weeks. So just a rout in the commodity market right now, and that sort of has spread into equities as well. Could see some possible bounces on gold this week. We saw a lot of gold bugs, and actually let's pull up that GLD chart, the ETF for gold. Just a big time ass whooping here, especially on Friday, down to over $100 an ounce at one stage on Friday. If you've been looking at a lot of the message boards, a lot of the long-term gold bugs threw in the towel on Friday, so we could see a reflex bounce back up to that 165 area. So, if you've got some risk in you, you could be looking at a bounce in this, especially if we see the dollar retreat a little bit tomorrow. So that is a trade you can look at. Another way to play it could be a short on the DZZ, that is the ETF. I don't like taking these home overnight, but if we see gold start to rebound, this could easily give a 5 to 10% move tomorrow. Russell 2K, again, similar chart to the Dow, just beaten over the head, and this is why we remain high cash. I mean, every segment of the market is just getting decimated right now, and the best place to be is just high cash. Now, a couple of trades we've been in, and Eastman Kodak (EK). I added to my position on this one on Friday at 231, 232. Looked like an excellent bottom chart. We have the 20-day exponential up there at 268, and then in after hours, the stock was trading down at $1.99. And the reason being, and the reason is kind of stupid in my opinion, they released a SEC filing that they drew down $160 million dollars from their bank line. Eastman Kodak is a gigantic company that does billions of dollars in sales. You saw a lot of talk about, oh my God, why are these guys, if they're selling their patents and sitting on $1 billion in cash, why are these guys going out for debt? Something bad has happened, and you had traders dumping this in after hours. Guys, we're going into the Christmas season. This is when companies draw down and get cheap financing for to manage their cash flows going into the December quarter. I mean, this is when companies like Eastman Kodak do half of their sales. Drawing down your credit line, this is what most companies do. Look what Mad Catz did the same thing last year, and it predicted a massive quarter. So this one, unfortunately, I'm going to probably have to average down on it. The chart looked great. The lesson to take out from this is, even though you've got a great chart, news always trumps charts, and news plus idiots always equals sell-offs, especially when they don't know how to interpret the news. So probably looking, unfortunately, to average down on this one. I still think the reaction is stupid, in my opinion, and would not be surprised to see it rebound back up to where we added on Friday over the next couple of days. If it does really get hit, I would be looking to add down here in the 180 or under area for a possible double bottom. But hopefully, we've got some common sense coming into this stock tomorrow. Sirius, again, the chart looks exactly like pretty much the major indices. If we've got any upward movement in the market, we're looking at a 10% move back up to the 50-day moving average with decent support here. Again, for a lot of you guys right now, 90% minimum cash overnight. If you can go 100% cash overnight, fantastic. If I had gone to my rule where I said I was going to go 100% cash, I would have missed the sell off on this stock in after hours and be able to load the boat on it tomorrow morning for an easy gain. But, that's just the way it is. If you do hold stocks in this market, you have to be prepared to see them lower or to add to it. Otherwise, just stick with that intraday scalping scenario. When the time is right, we're going to move away from our half position stance and our high cash stance. But until we get some sort of resolution in with the Greece crisis, we're going to be looking to continue the same. Now, one stock to keep an eye on this week, and it's a really high price stock, is Amazon. On Wednesday, they're holding an event where they're expected to release their new Amazon tablet. This stock could get $5 to $10 upside, especially if the market does turn around and we get some positive news from Europe. This is definitely a stock to keep an eye on for scalping over the next couple of days. It could see a very nice rebound, and if the price point is right and the expectations are their new tablet's going to be under $300, could be a really big winner for Amazon. And recall what I said last month. Amazon is a stock that runs every single year from now until January and averages $20 to $30 each pop, sometimes even more. So we're entering the time for these big retailers, and this is when Amazon really dominates the market. The pop scan going into this week, not a whole lot of plays. No real surprise given the decimation we saw in the market last week. But we're going to continue to monitor it. Small scalp plays, on a lot of these stocks, if you get 10 to 15 cents, be happy. Take the money and run. What we want to see starting to happen is for us to get into some trades, take the scalps, and see them start to continue to run higher without us. Sort of similar to what we saw in the SMH on Friday. We were looking for 29.50 to 29.60 on the SMH Friday. Ended up running up to 29.90. We missed some of the gains, but that is exactly what we want to see. Once we start seeing more and more of our trades continue to run after we've booked our profits, then we can look to widening our target gains on some of these plays. But again, be nimble, be light. play half positions, high cash overnight, and let's just see where the market takes us this week. Going to be interesting to see what news we have come out from Europe overnight, and just based off this possible near-term bottom action we saw on Friday, if we don't get any skeletons in the closet, we could easily see a 400-point bounce on this market and still be deeply oversold. Where we're going to be looking for a breakout is that 11.6, 11.700 area, and we don't need to be in a whole lot of stocks until we break out there. Even if you see a lot of stocks moving, when we start to see the market get up here around the 12K level, then you'll start to see a lot more of these safer plays, and that's what we're going to be shooting for. So, be a little bit patient, guys. Hopefully this shitstorm is going to be over soon. That is it for the video. Any questions, feel free to send me an email. Otherwise, I will see you guys in the chat room tomorrow. Goodbye.